everybody. Welcome back to another episode of everyone's favorite stock talk show, the Wealth Advisory's top stocks for the month. We are on to October 2023. I used to say this like every month, and I used to get lambasted about it because I said it every month. But like, I can't believe that it's October already.
Yeah, it goes fast.
You know, it really does. We just got you know that my wife and I, we bought a house in a new neighborhood, and we just got an email from the builder. He's getting ready to turn the neighborhood over to the HOA. But he's got to get everything, approved by the county and stuff like that. And so anyway, he sends out an email and he's like, hey, we just put down some new grass seeds. So, keep the grass long. Don't cut it shorter than 4 inches until the first frost. And I was like, the first frost, man? What are we talking about the first frost for? It's still summer. But yeah, October it is. Halloween's going to be coming. Before Halloween gets here, we're going to have all the Christmas displays up, because there's only, 85 shopping days until Christmas. But it's crazy. The year's just moving right along. Thankfully, September's behind us, to be honest. Like, usually I'd like for the month to go a little bit slower, but September was a rough month. Markets were down. I don't have the numbers right in front of me, but I want to say the S&P was down about 4% or 5%. The NASDAQ down like 7 or 8%. You had the Dow was down 3%. I mean, everybody just got beat up. We had some stocks that definitely took it on the chin. Our real estate investment trusts are definitely did not fare well during the month, but it's kind of like receding tide lowers all ships, just like a rising tide raises.
Those are largely income plays too.
Yep, that too. So you've got Treasury yields are rising, so there's no alternative. You can go and you can get real yield from Treasuries and have basically a risk-free investment there, as long as the U.S. doesn't default or go bankrupt or whatever. we'll fingers crossed, right? But yeah, so we're seeing that, so people are definitely pulling out of utilities, real estate, typical income investments, because you can get a really high yield with a risk-free rate. Like, yes, you can get, 10, 20% yields on stocks, but you have the risk that they could, go down by 10%, whereas those treasuries, at the end, they're going to pay you back what you bought them for, basically. I mean, right now, they're actually going to pay you back more than what you bought them for because treasury prices have been falling, which is what's causing the yields to rise. But anyway, that's, all other things. The market was rough. We had a couple of losers, but we had some nice big gainers. Centrus Energy, man, it gave you another great win. I feel kind of silly because last month I said, I don't think we can get another 30% out of it.
And lo and
sure
behold,
as heck, we got another 30% out of it. That one's just been tearing up the charts. People people are starting to fall in love with nuclear energy again, I guess. Uranium's been in a super cycle too, or starting a super cycle, we'll say. Uranium prices are up around between 50 and 100% this year. Uranium stocks are just ripping. Centrus, is related to those, so it's been ripping too. Who else? We had another one that was up pretty big. Alliance Resource Partners, our coal stock. It's doing really well, one, because, you see rising oil prices. That means that, like, some countries might, move a little bit, towards more coal. You've got, lots of coal plants under development all around the world, India, China, all around the East, really. In the West, not so much. But also, ARLP, so these energy companies, this is something that I've said, like, since the beginning of, the electric vehicle movement, all of this alternative energy, is that, like, big energy companies are not going to give up their dominant position, right? They're going to be the leaders in alternative energy, too. And ARLP just took a big step forward to that, where it put it made, I want to say, a $23 million investment in this private company that's developing cathode materials for EV batteries. Its investment was then matched with, I want to say, a $60 million grant from the Department of Energy. So the Department of Energy and ARLP are sort of combining forces to work with this electric battery company, or with this EV battery company, which I think is really cool. So they're obviously taking those steps. They understand that coal is going to be around for a while, but it's not going to be that revenue driver that it's always been, and they're expanding. I love to see that, and I think that had a little bit to do with this month's rally too. So we beat the markets, not by a ton, but we still beat them, and that's the important part. That's our goal here every month. And so we're back again with a new list, which I think is even better than last month's list. I know I say that every month, but it's a really good one, and I think we can beat the markets again. We'll see how things happen. Some analysts are saying that October we could turn around and see some rallies. Maybe we start that Santa Claus rally, like coming into the end of the year. We'll see how it is. There's arguments, for both sides that the market could drop further, but that, sellers could be getting kind of exhausted and buyers might step in and pick up at these technical levels. So anyway, let's go ahead and get into it. Before we do, I just want to point out, as usual, that, if you're watching this on YouTube, I'm going to run through my first 2 stocks. Jason's going to run through his first 2 stocks, and then we're going to cut that off. We're going to save the last 6 stocks for our paying subscribers because, as I always point out, this is a service that we do for our paying subscribers. It wouldn't be fair for us to give all of it away for free. So if you would like to become a subscriber, there's a link to a discounted membership in the description below the video. Just click on that. It'll take you to an order page. And honestly, you get so much more with your subscription than just the top 10, monthly recommendations, updates on our model portfolio, access to all of the reports and analysis we've ever written. I mean, it's really well worth the money that you pay. And honestly, you can't get much for what we're charging for a subscription. Excuse me, for a subscription anymore. So that being said, if you decide that you don't want to get a subscription, we won't hold it against you. We will continue to put these videos out for as long as you want to watch them. All we ask is that you give us a thumbs up, subscribe to the channel, hit the bell to make sure that you're notified when we post new content. So with all that being said, let's get into it, all right?
Let's do it.
Okay, long intro. So we'll keep these picks a little bit short. And my first pick this month is, it might seem kind of harebrained because Chewy's not been doing great this year. It's down about 50% year to date, 30% this past month alone. But to get things going this month, I'm going to do contrarian picks. So my first 2 picks are kind of contrarian. And hence Chewy is in here. It seems like it's really oversold, and it could be like in for a rally basically on any optimistic economic headline. It doesn't have to be company specific even. If somebody puts out a headline that says the consumer's getting stronger, I think Chewy could rally off of that. So like I said, it dropped 30% last month. It's down 50% year to date. It's still a great company. I still really like it. I personally have shares in it. And like I said, it seems oversold. I think it could rally this month. So we're going to give it a shot. It's going to be our number 10 pick, my number 5 pick this month. And the ticker symbol is CHWY. I almost forgot that. But I mean, it's there on the screen anyway.
There for you.
Let's just cross that out. There we go. There's the ticker symbol. So anyway, that's my first pick. So I'll pass it off to Jason here after I clear off my artwork. There we go. All right. Cool. And you're next.
So yeah, my first one today is a company we've talked about a little bit recently. It's Leidos. This one is LD. Leidos, they're kind of a tech conglomerate. They do a lot of technology stuff. Like we've talked about, they're recognizable because they make the airport scanners that you stand in when you go through security at the airport. But they also do a lot of work for the military as well. And the reason I have them on here this month is because they just signed a $8 billion, actually $7.9 billion, but I'm going to go ahead and round that up to $8 billion deal. Yeah, right. With the U.S. Army to provide IT equipment like servers, workstations, computers, all that kind of stuff. That is a huge amount of money, guys. $8 billion. To put that in perspective, Leidos as a company only got $9.5 billion of revenue from its military contracts in 2022. So they got $9.5 billion in all of that entire year of 2022, and now they walk away with an $8 billion deal with the Army that they snagged from the jaws of another favorite of mine in General Dynamics. They had held the prior contract for this kind of stuff, and that was only at $4 billion, so this is double the size. Leidos swooped in, stole it right out from under them, and it's indefinite. It's going to happen. This is basically for computer equipment, and so they're going to supply it for as long as the Army needs it. It could go on for as many as 10 years, or until the Army finally says, "Okay, we've had enough.
We don't need computers.
We're good.
Anymore.
Yeah, we don't need computers anymore." So it's a long-term deal. It's a lot of money. And what is also indicative of is kind of a shift in the military, which I've talked about in some other publications, because we're talking now about things like artificial intelligence and predictive analytics, these things that require a lot more computing power than what a lot of these institutions and legacy systems in the military have had over the past several decades. We're kind of moving into this new frontier of technology for military applications where things are going, they're becoming more cloud-based, they're becoming more web-based, there's more edge computing, there's all this stuff going on. There's, like I said, the AI and predictive analysis, trying to figure out missile trajectories and for hypersonic weapons and stuff like that. There's a lot of computing power that's really needed, not to mention communications and, surveillance and satellite imagery. All of that right now is being connected in the military. The goal for the U.S. military is to basically have everything in a giant cloud that every single branch, every single battalion, every single ship, plane, tank can access and get real-time information, that everything's shared, and they basically make kind of a parallel digital world that can be used for things like targeting and espionage and any kind of national security threats to address. So that's kind of why you're now seeing a big technology deal come down here for Leidos. That's why it's twice the $4 billion deal that General Dynamics had preceding it. And that's why I'm happy with what Leidos has done here.
Right. I got to say, that's one of the great things about having the best companies in the portfolio is, General Dynamics, great company, lost the contract. Well, that's okay because
Leidos
another great
scooped
company
it right
that
up.
got
Yeah.
it, I love that. Yeah, it's a great company, man. I've always been a big fan of Leidos since I first uncovered them like years ago. I had no idea that they were a defense contractor. I was really just sort of searching for defense contractors, and this one popped up. And
Yeah,
I'm like,
they do
what
a
the heck
good
is this
job of
company,
kind of straddling the commercial and government, sectors, private and government, so they're not as big as like what we call the big five in the defense industry, but they are still obviously a very significant player in this stuff. And I mean, if they keep netting tech deals like that with the military, then they'll be on their way.
One of the nice things I really like about them too is that they don't just work with the military. You know what I mean? They also work with like the GSA, like other government, like civilian organizations within the government too. Love it. All right, great pick. That was our number 9. So we'll get to my number 4, our number 8 pick, which, like I said, guys, this is another kind of contrarian one. Innovative industrial properties. So IIPR got whacked last month, right? Partially because markets were falling, partially because it's an income trade, partially because people are kind of worried about this industrial real estate, corporate real estate, and things like that. And so they're kind of lumping everything together. But also, I don't know if anybody was paying attention, but there's been a new cannabis banking bill making its way through the Senate. And basically everybody's convinced that once cannabis companies are allowed to borrow money from banks, that innovative industrial properties, which is sort of kind of acted as like a bank for cannabis companies, won't have a business model anymore. But the thing is with that is that if that were going to be the case, then none of our real estate investment trusts would have business models, right? Because stores have always been able to go to banks, right? Regular retail stores have always been able to go to banks, and yet they rent their properties from realty income. Gas stations have always been able to go to banks, and yet they rent their properties from service properties trust. Like all of these companies have always been able to go to banks, but they would rather not own the property, so they rent it from real estate investment trusts, and that's going to be the same thing with IIPR. Like, yes, they might see a small decrease in the number of acquisitions that they're making over the course of the year and stuff like that if these companies can access debt from banks. So IIPR, since it's able to turn a profit by renting those properties back, it doesn't have to charge the kind of interest rates that a bank might charge for a company that can't maintain a going concern. You know what I mean? Because these cannabis companies, they don't have profits. They don't have net income at the end. So a bank's going to look at that and be like, so how you going to pay me back? And IIPR is going to be like, totally cool, don't have to pay me back, just pay me rent.
There you go.
So I think that that's really going to go. I mean, it's yielding like 10 or 12% right now. It's gotten too washed out. It shouldn't be as low as it is. And like I said, this whole cannabis banking act is not gonna affect IIPR's business that much. And to be completely honest, I don't think it'll pass this House.
Right.
Because it's passed the Senate, but now it's got to go past the Republican-controlled House. That like right now they can't decide amongst themselves whether or not to keep the government running.
Our government probably won't be open by the time this is aired. We're recording this at a period where by the time you see this, the government's probably shut down, for being realistic about it.
There's a bill that's been proposed. They probably won't vote on that until Saturday if they even show up to work. I mean, if they can't pass government funding, I don't see how they're going to pass this bill. They can't agree on anything. And, when that bill does fail, if I'm right about this, pot stocks are going to fall, but IIPR is going to rally because everybody's going to realize that they bet on the wrong horse. You know? So that's my pick here. And you already know the ticker symbol because I keep calling it that, IIPR. I'll remember to write that first next time, I promise. So my number 8 picks are our number 8 pick, my number 4 pick. Gosh, these numbers are just killing me today. I'm usually better with them, folks, I swear. All right, here we go.
There you go. Yeah, and I do agree with you on that one. I don't see. I think any positive cannabis legislation, should it pass, would actually only be a bullish case for a company like this. I don't see it working against them.
Definitely. You know, if it passes, it's good for them. If it doesn't
pass, it's also good for them in the short term.
Yep.
All right. So moving on here, we've got another company we're pretty familiar with. This is Devon Energy.
Love Devon.
Yeah, this is a good one, and we've been talking about, and I've talked about this a few times this year because if you are like a longtime viewer, you know, even going back into the spring, I've been talking about the bullish case for oil prices back when, you know, it was in the 70s. I was telling you it was going to go to 80. I was telling you it was going to go to 90. It ultimately did. They then regressed a little bit, but in the past month now, oil shot back up. Everything that we predicted in terms of being, you know, oil prices being bullish, getting up to $90, $100 a barrel, has come to fruition. So that's going to be big for Devon, which is a major energy producer for the United States domestically. Mostly shale oil is really where they kind of make their nut. So the thing about Devon, though, is that when oil prices are high, this company kicks out a lot of income. When oil prices are low, they're going to cut that dividend. So the last time they cut their dividend from $1.55 per share in the third quarter of 2022 to just 49 cents in the third quarter of 2023. So they're paying less than a third the dividend that they were back in the third quarter of 2022. However,
oil prices were lower then, weren't they?
Yeah, back then. Again, as oil prices more or less sank down. But the last time oil prices hit $100 a barrel, they were paying $1.25 per share. So that's probably what we're going to see from them going forward. As oil prices stay high, and if they are able to be sticky and kind of persistent, you're going to see that dividend go back up. It's going to go up from less than 50 cents a share now. I don't know how quickly it'll get back over $1, but they're going to start bringing it back up. It'll probably go back up to 60, 70, 80%, start, approach those levels again as oil prices remain high. So the idea is that if you more or less buy Devon now while the payout is low and you get in, you'll get the higher yield later at a much lower share price because, again, the oil prices are going to support this company. They're going to support its income. You're going to see a lot of growth in the bottom line, top line. You're going to see it all, and that money is going to be funneled back to shareholders. So that's why I've got Devon here. I think it's a good way if you're looking to get in on a stock that is on track to raise its dividends. Like that's what I'd put money on right now. I would absolutely be willing to bet that dividend hikes are in the future for Devon. And so that's why I've got them here on the list at number 8. And
we don't have a copy of the chart right now. But if you were to look at the chart, you can see basically every time Devon announces an increase in its dividend, we get an increase in the share price.
Yeah, it draws people back
in to capture that dividend.
Yeah.
When you see them reduce it, we get a drop in the share price because folks are looking for that yield elsewhere. Right. But yeah, I think you're absolutely right. As they raise that dividend, not only are we going to be able to lock in that good income stream, that growing income stream, but we're also going to be able to capture that capital appreciation as other investors follow us into it.
Right. I think you're going to see a real resurgence in particularly domestic energy companies here in the United States.
Yep, it's a really good one. I like it. So that's our first 4. So let's do a little recap here before we end things for those of you watching on YouTube. Our first pick, number 10, is Chewy. I really like Chewy long term. I think that it's been sold off too hard, and I think honestly, this is a very contrarian pick. It could go against me, but if we get any sort of positive economic news in the coming month, I think Chewy's going to rally pretty hard on that. So that's my first pick there.
Yeah, and then Leidos here, like I said, they just nailed an $8 billion contract with the U.S. Army when they only got $9.5 billion from military contracts in 2022. So they're on track for a big year. IT is a huge, huge focus for the military going forward as we continue to modernize and talk about 21st century warfare, near-peer competition with Russia and China. Leidos is getting right in there, not to mention growing defense budgets worldwide.
Oh yeah, definitely. NATO too, like all of our NATO
Everybody,
allies,
yeah,
everybody's
everybody's pouring
throwing.
more money into defense.
Literally
You can't
everyone.
afford not to at this point.
No, you really can't. All right, so next up, number 8 is Innovative Industrial Properties, my number 4 pick. Again, contrarian pick. It's been sort of getting sold off because it's been getting hit with a bunch of different headwinds. The main one, I think, being this cannabis banking bill. I don't expect it to pass, but even if it does pass, it's not going to be a negative for IIPR. You know, like we said, either way, the stock should rally once we get some more clarity out of DC. If we ever get clarity out of DC. And so next up at number 7.
Yeah, higher oil prices are going to definitely help a U.S. shale producer that has, I would say, not really lived up to its potential over, and again, we're talking about oil prices basically bouncing between $70 and $100 per share over just the past few months. That's volatility, but, like if you get that consistently high oil prices, which we are because that's what the supply and demand equation says right now, is that, oil prices are high for that reason and they're going to stay high because Saudi Arabia and Russia aren't going to rush out to pump more oil.
Right.
They're not interested in doing that, folks. So Devon Energy, like I said, when oil prices fell a little bit, tumbled a little bit, had cut its dividend. Now they're back up. You're going to see a lot more improvement. You're going to see that dividend go up.
Oh, definitely, definitely. And I just read an interview with, actually it was Devon's CEO. It was Devon's CEO that they quoted, and basically he was saying that, like, even with rising oil prices, they really don't see them increasing their capex next year. Basically saying that, like, they're planning on spending less money on capex next year because the material costs have finally started to come down. The supply chain sort of like worked itself out and everything. But the reason that they can't expand is because they can't get enough people.
And I'm glad you actually mentioned that, 'cause I don't know if you saw it was out on Bloomberg.
I think so.
Because I saw the Bloomberg interview with him. Another thing he pointed out, was quick to point out, was that there has been no demand destruction. Despite the higher oil prices, that's always kind of the idea about any kind of commodity really with elasticity, is that the prices are going to go up, demand's going to go down. But so far that has not been the case. The oil price has gone up, people remain willing to pay that, willing and able to pay that premium. There's been no demand destruction from the higher oil prices, which really kind of continues to fuel, no pun intended, the case that oil prices will remain high.
That was a good pun, even though it wasn't intended like that. I appreciate a good pun. You all know that. So there's our first 4. Honestly, I think those are really good. We really love Devon. I love the oil industry, especially going out into next year too.
Yeah, sure.
Short term and medium term here. And yeah, I think this is a really good pick. So we're gonna wrap it up here for those of you watching on YouTube. Like I said, if you want to become a full-fledged member of the Wealth Advisory, we would love to have you on board. Just click the link in the description below the video. It'll take you to a discounted order page where you can get basically the lowest price that we've ever offered for the Wealth Advisory. We really hope that you join, but if you don't worry, just pop back on next month and you'll catch our first 4 picks again. So as always, thanks for watching and have a great month.